Hey everybody, good morning. Welcome to Ready Set Trade. My name's Doc, and today is Thursday, the 6th of April, the day before Good Friday. Tomorrow is a market holiday, so this is effectively the last day of trading for this week, although Globex will be open tomorrow morning because it's not a federal holiday. So we have Globex open tomorrow morning. We're going to have the jobs report out tomorrow. All right, let's see what's going on. We have jobless claims came out this morning. Let's see how they did. And this is, I don't know if we consider this to be a concern or is this a good thing or not. Jobless claims going up slightly. Okay, does that mean that we're going to expect a softer jobs report tomorrow? And in which case, then the Fed is truly well and done. So a lot depends on what happens tomorrow. We also have James Bullard coming out this morning at 10 o'clock. I really don't think it matters what he says. Now, that's just my opinion, but I really don't think it matters what he says. The last time he spoke, he was very much right down the middle. I think he's been coached recently. I think the days of old Jimmy pushing the market around, as he did back in early February, because he started right when we're at the top of a rally. He's like, man, I dream about those days where we had 50 basis point rate hikes again. In fact, I really wanted one last time, and I'm going to do it again this time. And, just completely, unsettle the market. And that was kind of the catalyst for it to sell off a little bit. I think we dropped, 7% or something like that over the next few weeks. So that's kind of it today. And tomorrow is going to be fun watching the jobs report coming out in the Globex market. Should be good sport. And then we'll see that on Sunday night reflected in the futures as well, too. And so we'll get a read for how the market's going to open. Good morning, everybody. So we got Len checking in. We got a bunch of folks on board. Good to see you guys. Hope you've got some time scheduled with your families this weekend. Not much in the way of earnings coming out next week until we get to the end of the week, and then we have most of the big banks on Friday. Fed funds futures, 60% chance of no rate hike in 3rd of May. 56% chance of no hike in both May and June. And then by the time we get to the end of the year, we are cutting rates. Okay, it's going to be a scary year. Will we climb the wall of worry, or will the market succumb to all of these pressures and push it down? We don't know at this point. All right, we will hear next week. We'll be here Monday through Friday. We will. Now, today, a couple of things to do. Let's bring over the charts and stuff. So I'm thinking we've got a QLD $50 April call. And we've had, quite a rally into the QLD. And I don't necessarily want to surrender that. If this is going to be, a move from the NASDAQ higher, right now it's leading the market. I don't know if this is going to roll over or not. A lot of people think it will. A lot of people think it will continue. It really doesn't matter what we think. But right now, what I'm seeing is a strong rally. We've had a transition into a weekly uptrend here. And this could lead to a monthly uptrend or not. We don't know. But I do have a $50 call, which is going to expire in 2 weeks. And it may make sense to roll that thing out. Give myself a little bit more room. And I can actually roll it out now and make a profit on closing out the April position. Not much of one. It's going to be just enough to make it worthwhile. But not going to lose anything on there, and give myself a lot more room to the upside and set myself up for a nice trade for May. So we can actually roll this out to May. So I'll do that. We have, 5 minutes to go here before the opening bell. Okay, let's see what's happening with the futures right now. And futures were up slightly, and now they're kind of down. So I think the jobless claims did not really make the market happy. Jobless claims did not make the market happy. I'll tell you what, guys, I am going to close down Thinkorswim and reopen it again because I'm getting that, and that's the sim platform, but I'm getting that kind of nasty looking, jerky look. There's some issue. I explained to me once upon a time, like there's a problem with a stack heap. So what happens is the memory gets overwritten and it starts to jerk. So we'll just reboot it here. Now, when I last looked, we had about a 23-point expected move that might be higher by the time the opening bell rings because of this jobless stuff. So we'll see. The Russell's actually up today, which is slightly good news for us. Yeah, that's better. No jerky. Okay, so let's see what's going on here. Let's look at yesterday's. So yesterday we had a gap. And I was able to get my iron fly on and off. It did take a while. It wasn't very fast. Let's try this again. Are we going to have problems with the drawing tools? Okay, so there's our opening range. Was right there. Okay, that's our opening range. Yesterday was not super big. That's okay. And we generally had a distribution day yesterday. Now, as what happens with the price is quite often, this is our savior for the day. Nice little pop-up. This is where I exited the trade at my $50 target. So that worked out nicely. Otherwise, I would have had to hang in there pretty much all day. Let's see. Would I have been able to get relief on this thing? I think I would have. Yeah, I think I would have gotten relief by the end of the day. At no point did we actually get to the stop. So you can see how that VWAP acts as resistance, though. Boom, resistance. And then once broken as resistance, then becomes support the rest of the day. So the VWAP has been useful for us to this point. Okay, let's see. What do we got? About a minute and a half to go. Now, something else that we have to close is we've got this April 11th trade, and I'm close to taking it off. I'm looking for 210, but I want to just close it today no matter what. I don't want this thing to live past. And what's also going to happen is we're going to see implied volatility rise into the close today. It's going to be very imperceptible. It's going to be similar to what we see during earnings, right? Stocks on earnings, the implied volatility rises into that and then deflates after the event. So you don't want to get pinned into a position. You want to go as flat as possible over a long holiday weekend. You don't know what's going to happen with the jobs report. We don't know what kind of market we don't know what's going to happen over the weekend. We're going to come back here on Monday and go, wow, let's pick up the pieces. What happened? So we want to always be closing positions when we have a strong hand. And we have a strong hand in this position right now when I look to close this out at some point today. So we'll just keep this on for 210 for right now. Maybe if we get a little bit of a bounce, this will fire during the morning session. Okay, 30 seconds to go. Let's see what we have in terms of the expected move. It's still about 23. So I'm going to be placing an iron fly after a few minutes here. Again, I'm not going to publish this into the room. I'm experimenting with adding trades that are less than the expected move width. So right now, here comes the opening bell, 23.04. 23.04 is what we got. And that's exactly what it was yesterday. How about that? 23.04. All right. So I'm going to go over here, hide positions, and start to work on building one of these things. We're going to see what we have. First of all, we're going to set up our expected moves and our opening range. I'm going to go out to the gap chart. Go out to the gap chart. So we're gapping down slightly here today. And so we've got ourselves, now we did actually leave a little bit of a gap yesterday. Good morning, Juan. Good morning, Len. We did leave a little bit of a gap yesterday. Now you can see these big gaps that we left on the way up, and now we're leaving them on the way down. So this is playing out the way it sort of should with that exhausted fractal on the daily chart. So this is all making sense, at least to me. And so today's opening print was 4107.75. 4107.75. So that means our upper expected move for today is going to be 4130.79. Lower expected move is 4084.71. Let's go put those on the chart. Okay, let's move this lower one first. 4084.71. 4084.71. Okay, so that's down there. Let's also, we see that opening gap today. Let's change the anchor to today. I'm going to anchor that VWAP off of today's open. And then let's move this one. This is going to be our upper expected move. This is going to get changed to 4130.79. 4130.79. And we have a pretty tiny expected move range. Let's make that bigger. Okay, so there we go. There's our battle zone for today. We have a lower expected move in the blue line. We have an upper expected move in the blue line. This other blue line here, I wonder if I should change that color, but that's the anchored volume weighted average price. And right now it's moving down. So I'm going to let this set up our opening range for a second and just make sure that we're not going to step into a horrible trend day. Right now, looking at the market internals, they look very benign. They don't look anything sinister at all. Okay, so also while I'm doing that, what we can do, why is this? It's working against me. What we can do now, if this starts to run above 250, and if I'm in the hole on that position, then I will hold it over the jobs report if I have to. Let's go down to our QLD position. So here's our long covered call. And I've got this, I must have this in a different account. Yeah, I've got this on my IRA account. Okay, so we've got $50 calls up there, so we can buy these back. And I'm just going to do a manual roll on these. So I'm going to close them. And I'm going to try to close them for maybe 70 cents. Oh, okay, so let's try 65. Let's try to close these for 65. And we have closed them for 65. And then I'm going to roll these out. So I'm going to go back into Thinkorswim. I'm going to roll those out to oh, it's so slow this morning. QLD, we're going to roll those out to May. And I want to see if I can get somewhere up to, okay, so 52. 52 is what it's going to be. And I want to see if I can sell those for $1. Let's see, how many shares do I have here? 200. So let's sell the 52s for $1. Well, we'll try midpoint at first. But what's going to happen is these are going to get pulled back down. So let's just try $1.15. And then before it pulls down, so if I can get at least $1 for these, that's what I'll do. Yep, see, it just pulled down the offer down to $1.15. So now what I'm going to do is let's cancel. And so we'll go for $1.05 now. And there we go. Okay, so I'm going to write this into the room. Let's see, $50 QLD. We close them for 65 cents. And that was, let's see, filled 19 May, 52 for $1.05. So that gives us some room for capital appreciation because the cost basis on those was 50. Okay, so off we go. We're going to notify everybody about that. Back to the charts. Let's see what we're doing. Down 13, 14 handles. So we're getting a little bit of weakness coming in today. Bounce off of there. So now we're starting to build that opening range. It's kind of in the middle of things. So let me go over to the SPX, and let's put on a 20 wide iron fly. Let's see if we can. I'm going to center this around 40.85. And we're going to make it 20 wide. So that's going to be 41.05 for the long call. And then 40.85 minus 20 points is 40.65 for the long put. That gives us a credit of about 14.30 or so. Let's see. I'm going to need to bring this down to 40.80. I'm going to bring everything down 5 points. Okay, that's a bit better. That's a bit better right there. We want to sort of center the trade on the skew, which is always going to be, almost always, going to be slightly below the center of the trade. Okay. So again, the whole idea behind this is I'm setting this up with a more narrow because I want the trade to be able to, I want the price to be able to trade around. So I'm not going to stop this thing out at the very first bad excursion of this. Okay, so I'm going to put this in, see what I can get filled on this. Takes so many clicks sometimes to get these trades in play. Not very quick. Okay, so I'm going to try to get a midpoint fill at 14.10. And then I'll work down from there. Okay, let's move that down to 14.05. And there we go, there's 14.05. So I'm not going to give this a whole lot of attention. I'm just going to, I like to put these into a little group. So I move it into its own group, and then I can keep track of it. So we got filled for 14.05, so I'm going to be looking for a 13.55 exit. $13.55 exit. Okay, so our entry was pretty much 40.74. So I'm going to look to, I'm going to set up some at least mental stops here. And the mental stops I'm going to put on the price slices are 40.51. So I don't want to see this trading a whole lot below there. And then the upper stop would be 40.97. So this is what I use the slices for here. So those are mental stops. You don't want to use like stop orders on here because you will get stopped out, even if it's a good trade. Market will find a way to blip and stop you out. Okay, so that was what? 14.05 was our entry. So we'll keep an eye on that thing. Okay, so here's our, we're trying to get out of this guy at 210, and it's being a little bit naughty because the price has been moving down. Yeah, looks like we do have more downside action to go today. Yeah, let's go out to the main chart. So I don't want to spend too much time looking at that iron fly. So here is the main fractal chart and what we're looking at here today. So this is in question, whether or not this is going to be a monthly lower high or whether this is going to transition into the next trend. We do have a weekly uptrend in play, but so far this is a lower high. It's got to trade above 4,200. Otherwise, we're seeing the formation of a lower high, and if it trades under 3,800, this thing is toast. Now, we did have a super exhaustion signal the other day, and what I wanted this thing to do to show that it was remaining bullish was to stay within a 50-point range, and it's almost not doing that as of right now. It's almost not doing that right now. So unless we get some relief and this bounces back up, this may be headed down. And if it heads down, what that means is that we'll more than likely get one of these things again. So the market just cannot seem to flag and break. And that's not going to happen until the price moves into quiet and trending. Quiet and trending behavior, we will get flags, we'll break out to the upside. As long as we're in the bear market behavior, so technically we're not really truly in a bear market at this point because we've transitioned into what I call sideways and volatile. So we're kind of in this sort of no man's land right now, sideways and volatile. But during sideways and volatile, you're going to get every consistent breakout will actually fail in the opposite direction. Everything that looks like it's heading down into the gutter will find a way to release to the upside again. So this is not showing me the character that I really want it to show to prove that it wants to go higher. So we'll find out a lot about this thing in the next couple of days after we get through the. Okay, so that's at least constructive here. We're getting a little bit of a bounce. Watch the anchored VWAP. Anchored VWAP is a really good tool for understanding where the dynamic support and resistance is on the chart. Intraday. Now, it usually takes a while. It usually takes a good half hour before it shows any kind of an accuracy at all. I'm tempted to get back into scalping again. I go in and out of scalping because scalping is, it can be a huge waste of time and it can be supremely profitable. It depends on whether you can get into the flow of the market or not. All right, let's see what internals are doing. What's happening internally wise here? This is still really just choppy. I don't see anything that's really super horrible or great right now. This is just a very intensely choppy market. Doesn't know what to do with itself. Now, also, let's watch the implied expected move. We started off the day with 2304, and now it's down to 21.66. So it is shedding expected move very, very quickly. Now, I don't know if this market is going to be tense and waiting for Mr. Bullard or not. I don't know if that's going to be an issue. So far, we're doing fine. We're just going to leave this thing here. Good morning, Maydori. Scalping futures is fun when it works, and it's when it doesn't work, it will find a way to mess with your head. I spent so much time working on scalping futures. I mean, it was really just sort of into my soul. And, just because of the visual element of it. And it's so, man, you can have great days and lousy days. And it requires you find out your limitations in a hurry. I'll put it that way. You find out your limitations. And I found out that I was good at certain things and I was not good at other certain things. And if those are inconsistent with making money, then you got to be your own coach. And that's the hard part about it. Nobody's looking over your shoulder. So it's so much easier, I think, to make money with options if you can get something to decay on you, like what we're waiting for this guy here. All right, let's look at a market watch. Let's see what's moving today, what's not moving today. It looks like everything is red. Let's go to the sectors. Let's see what sectors are red today. We do have utilities higher. Technology is taking it in the shorts. Let's see what's happening with interest rates today. That's strange. Interest rates are actually heading lower today, although they have bottomed out for the day. And if we just look at the dollar index, we got to keep an eye on the dollar index. Dollar index is bouncing a little bit today, which is putting a little bit more pressure on equities. But nothing is all that horrible. VIX is going higher, as I warned you guys about. The VIX is going to go higher, and we're going to see implied volatility rise into tomorrow. Actually, we're going to see it rise into the end of today, and then nothing will happen tomorrow because it can't. Yeah, this thing's doing fine. All right, so at some point today, I'm going to have to close down this trade, the 11 April trade, which is profitable, but I mean, we got so close to this, it just kind of bugs me. So if we do see a bounce back up, this will fire very quickly today. This will fire very quickly. So that is the 11 April trade. Let me take a look at that. I'm going to go hide simulations. Oh, I've got this. Okay, so let's get rid of this. And this is what this trade looks like. So it's come all the way down here. So if we do get a bounce back up again, that's where the current price is. I don't want to do anything at all, even if the price goes outside the lower bounds, because we'll get a bounce back up at some point over the next few days. Even if it's just an intraday relief bounce, which is destined to go lower, that will be enough to exit this trade. And we may even get a gap up in the morning, which allows us to exit this thing at less than our target, which is always nice. So I'm not going to panic and do anything. And at the very worst, what happens is 250 is the most we can lose on this thing. So if we wake up one day and the S&Ps are down 100 points and gapping down and limit down and all that stuff, kind of like what we did in the pandemic, then my risk is limited on this trade. But I would like to close it today if at all possible. If at all possible, if I can make any kind of a profit on this trade. That is what I will do. Okay, the VWAP is still operating as resistance right now as we sort of continue plumbing lower. We did gap down today. To start the day. Now, look at all the gaps that are around the price. So it is very gappy, very choppy, very, very nonlinear. We had an amazingly linear move over the last week or so, as we jumped up 150 handles in literally 3 days. All right, let's see what this one is operating at. We got into this at 1405, and it's up by $5 right now, $10. So this can happen quickly if it gets moving. So we'll go back to hiding positions. We'll go back into this. This is in perfect position right now. As long as we don't see a big sell-off or a big rally from here, we're in good shape with this one. So this is kind of what I'm leaning to, is I'm leaning to a more narrow iron condor, which is actually it's counterintuitive, because most people are out there trading 50s and 60 wides and stuff like that. The problem is with those trades, you cannot risk manage them unless you have to have a really heavy hand, because you can't let them get away. The big advantage to a super wide fly is those options that are long options that are out of the money, they don't decay very much. They don't change in value very much because they're so far out of the money. There's no gamma to them. They don't really sense the price moving at all. But those options that are right at the money, those things decay like crazy. And so a wide fly will operate much faster. But I'm more concerned with risk control right now. And so I want less risk on these. I want to allow the price to trade around and do whatever it's going to do. And as long as I can catch this thing in the middle at some point during the day. Have you used any option screeners? Are they useful? Well, I do a lot of scanning. with, you can see the stuff that's coming into the room. Right, so all of our trading signals coming into the room. Is this what you're asking for? So we're looking for technical scans on these. These are all technical scans that are, we've got, I think, 3 or 4 different strategies that are firing into the room. So whether it's pullbacks or whether it's, we've got the Connor's crash signal it's a bearish trade entry signal. And then there's the SPY and GLD multi-time frame RSI Laguerre. So we've got those. Now, if you want to screen for, if you're talking about unusual activity, those kind of things. I traded like that once. I was trading for a hedge fund, and they requested me to look into following somebody that looked at unusual option activity. And the unusual option activity lasts for about 10 seconds before all these bots come in and just... So in other words, if somebody goes out there and says, all of a sudden decides that they're going to buy 5 million call options on GE, and that's considered to be a bullish thing, all of a sudden, you'll see everybody say, hey, look out, GE, 5 million call options on the March 23 $10 strike, those kind of things. And it's like, boom, it's just like, flies being attracted to it. And so next thing you know, the trade's over. So it was kind of like, you had to be really quick. You had to be on the ball. You had to have your execution down. And it was a mess. It was tough to make money in that, because you'd get in and you'd immediately set up like a limit order to get out with like a 50% return or something like that. So you had to get in really early, but you were always at the end of the line with the retail trades, right? So there's bots that were way in front of you on that stuff. So if that's what you're talking about, no, I will never do that again. Just not my cup of tea. So right now we are seeing the anchored VWAP is resistance. So we're still primarily trending down. And we have an opening range of about, 9 and 4, about 13 handles. So if we start to see the price trading above that anchored VWAP, then we'll start to see the internals. The internals may turn around, like we're starting to see some AD coming up. We're starting to see some positive ticks. So this will be all over the map today. And probably one or two or three of these gaps are going to get filled before you know it. So I'm anticipating some volatility here today. And this trade's doing just fine. It's, what is it up? Like $10 to $18 or something like that. 22. Let's see what it's showing here. Trying to get out at 13.55. Right now it's showing somewhere in the higher 13s. So once we get past old Jimmy Billard, this will probably fire for my target. Okay, let's see what we're doing today. Again, we're just chopping around, and right now the range on the S&P goes from 41.31 down to about 40.71. So this is about a 60-point range. This is slightly larger than I'd like to see. I'd like to see a really tight little 50-point range up here. And I don't know if we're going to see that. But if we bounce off this level, if these are the lows of the day, then we've got a chance. Otherwise, if we continue leaking down, then it's a matter of like, where's this thing going to find support? And then we have to play the fib game. We have to play things like this. We have to say, all right, where's the fibs here? And we take this whole swing from 3,800 all the way up to the recent highs, and we start to look for fib levels. And 4,000 is the one that comes out to me here as probably the level of support that we would most likely see, at least on the first bounce. So we'll see if that comes into play. But it's just been difficult price action across the board for a lot of folks. Okay, let's see, what do we got here? We have now printed an opening range. We have printed our opening range. The iron fly looks to be in good shape. Right now it's in pole position. We should start to see some, as long as Jimmy Billard doesn't say anything nasty, then we should start to see some pretty heavy decay coming into the position here. And we should be in good shape. So this is kind of what I'm working on right now. I'd like to do something, instead of being as discretionary as we are, because we're extraordinarily discretionary. And so, I mean, the probability, our results are really good for these trades. Let's see, what do we got here? The current numbers, I mean, we're winning 95% of them. Profit factor is 5.75. And there we go. We are out of the iron fly. We are out of the iron fly, I think. What just fired here? Yep. Yeah, we got our $50 target on the iron fly. Let's see, what is that? 10:01. So that was a 21-minute hold. That's not too bad for a $20 wide. So I like the risk control on these things a little bit better. So normally I would have done a 25 wide, and it might have been a little bit faster. But what I like is the fact that the skirts on this thing are pretty wide. I mean, look at this. I mean, for a one standard deviation move, we're only risking not even $200 to the downside. And to the upside, because of the skew, it's only risking about 120. So we can risk quite a bit on these things, and even not take an exit at the expected move, as long as we have justification for doing so, for staying in the trade. Because what I found is, through trading these things over the last 3 years, and I've probably taken hundreds of these trades, is that you get movement. You know, we see movement down, we see movement back up. Even on days that are considered to be trend days, we get movement all over the place. And as long as you can kind of stay in there on these trades, it's really rare when we get just a one-way freight train move. And normally we can avoid those things if we pay attention in the first 10, 15 minutes or so. I mean, because there's usually clues that this thing is just like, it's a freight train. I mean, the clues that we saw this morning were that market internals really weren't that terrible. And we saw two-sided trading on the market internals. So this is why I stayed into the trade. And now we can see the prices above the anchored VWAP. So it's going to use that as potentially support from here on in. So resistance, breaks through and now becomes support. So we'll see whether or not we go after this gap, which is today's. All right. Anybody have any questions? Anything else for today? So that was a 0T entry. And what was our, let's see, what did we center this around? 40.80. So now our profit factor is 5.75. No, it's more than that. 5.83. And our win rate is, for this year, 95% exactly. So I'll take that any day. For every dollar we lose, we make $5.83 on these trades. So I'm going to keep doing them. Okay, anybody have any questions? Hope you guys have a nice long weekend. I hope you guys enjoy the fireworks tomorrow morning with the jobs report. With any luck, I mean, we have maybe a slightly smaller jobs report, but we're looking for a Goldilocks number. So again, let's look at this thing. Tomorrow morning's employment situation is expecting 238. So the prior was 1311, and that was a blowout number. That was higher than expected. So if we come in something like 2.25 to 250, that will be a Goldilocks number. That'll be exactly what the market is looking for. That will show that, okay, the Fed's been able to slightly crush the jobs market without destroying it. It's been able to depress the jobs market without destroying it. And maybe, just maybe, there's a soft landing, in which case we're going to see the futures jump. We're going to see them jump higher. If we see a really big number here in employment, which could be artificial because a lot of these are counted differently, then, excuse me, I think the market's not going to be happy with that, because then that puts the Fed back into play. And what you can do is you can watch the Fed funds futures and see how those react. Right? So go over here, watch the Fed funds future, cmegroup.com, and see how that plays out. You can just watch this number here for tomorrow, because right now that's showing a 0. That's showing a big 0. And this would be a 25 basis point rate hike. Wow. What is up with the mouse? There we go. So that's a 25 basis point rate hike to 43%, 56% for nothing. So let's get the Fed out of the way. Let's make them irrelevant. So maybe, just maybe they've done their job. Okay, guys. Looks to be quiet. Thank you for joining me here on a Thursday. And don't forget, I'm going to try to close that iron condor by the end of today, as long as I have a strong hand. If this starts to go weaker, actually, let's see where it is right now, because the price is bumping higher. So right now we're looking to get out of this for 210, and it's 2.25. If we see another 5 points movement to the upside, this thing should fire. But don't forget, by the end of today, implied volatility will rise. So this is going to fight that. So if I can get out for some kind of reasonable return, I will do so, and I'll let you guys know. All right, everybody. You guys have a great Easter weekend. Hope you get to spend some time with your families, and I will see you guys tonight. I'm going to do the newsletter for the weekend tonight. There's no point in me doing another one on Saturday, right, because the market's closed. So I'll do one tonight, and then I'll be back here Monday morning. Okay? Thanks, everybody. Be good.